Hey traders, have you been struggling with guessing your trades and missing key market moves? You're in the right spot. Today we're exploring an incredible trading view indicator that's about to level up your trading game. Imagine combining the precision of key levels, the power of supply and demand zones, and the clarity of market structures, all in one streamlined indicator. No more cluttered charts, no more confusion. Just pure actionable insights to help you dominate the markets like a pro. Whether you're a day trader, swing trader, or just looking to sharpen your trading skills, this tool is perfect for you. So if you're ready to improve your trading game, kindly hit the like button. Also subscribe and turn on the notification bell to stay updated with our latest strategies. So with that being said, let's get started. To get started with this indicator, you want to go to Trading View and then open any trading security that you like because it works on all markets. Next, open the Indicator Search tab. Search for Price Action Toolkit. Then select this one by Flux Charts. Now, this is the all-powerful Price Action Toolkit. So what exactly is this indicator all about? Well, it's a powerful tool designed to help traders with accurate market analysis by integrating key levels, supply and demand, and market structures. Now let's explore the features of this indicator. First, we have the volumetric fair value gaps. As we all know, fair value gaps are areas of imbalance on the chart. This indicator plots fair value gaps and show the bullish versus bearish volume in that zone. The total volume of the zone will also be displayed while showing you a percentage ratio between buyers and sellers. There's also a multi-time frame option for these fair value gaps, so you can view fair value gaps on higher time frames without having to switch between your chart time frame. This makes it super easy to see the bigger picture all on one time frame. Next, we have the order blocks. Just as we all know, order blocks are areas where buyers or sellers are aggressively stepping into the market, and they can be used as supply and demand areas just like the fair value gaps. This indicator prints order blocks and also shows the bullish versus bearish volume of the zone. You can also view these order blocks on multiple time frames, just like the fair value gaps, so you don't miss any key areas on higher time frames. The indicator also prints breaker blocks. As we all know, breaker blocks are formed when order blocks are broken. And just like support and resistance, where support turns into resistance after being broken, the same logic applies to breaker blocks. When an order block breaks, it turns into a breaker block, and that can be used to spot market reversals. The breaker blocks shows the total volume in these zones, so you can filter out weak and strong points of interest in the market. And just like the fair value gaps and order blocks, the breaker blocks work on multiple time frames too. The indicator also shows different market structures that you could possibly use while trading. This includes break of structures, change of characters, and change of character plus. Break of structures occur when price breaks a previous high or low during an uptrend or a downtrend. This indicator will plot when there's a bullish or bearish break of structure, which will let you see the trend and have an idea of where the market is heading. Change of characters formed when a recent high or low is broken during an uptrend or downtrend. Change of character typically indicates a potential market reversal or a change in the trend. There's also change of character plus. It is formed when a recent high or low is broken during an uptrend or downtrend. But before this happens, price fails to make a lower low or a higher high, resulting in a stronger confirmation of price reversal to occur. So this indicator plots all of the bullish and bearish break of structures, change of characters, and change of character plus for better market structure analysis. Another amazing feature of this indicator is the equal highs and lows. This indicator will show you when equal highs or lows are formed, and these can be potential indications of a market reversal. Next, we also have buy-side and sell-side liquidity. This indicator will be able to flawlessly detect buy-side and sell-side liquidity zones and plot them right on your chart. Buy-side liquidity zones show where people who've gone short in the market will have their stop losses, while the sell-side liquidity zones will show you where people who are long in the market have their stop losses. Another cool feature of this indicator is the premium and discount zones. This feature will show you if price is at a discount. an area where the asset is cheaper than normal, and also show you premium zones, where the asset is more expensive than normal. Finally, this indicator shows you key levels where price is likely to have a big reaction at. This includes the highs and lows of the previous day, the previous week, the previous month, and the pre-market. Now that you have seen all the features of this indicator, let me show you a simple and profitable strategy that you can use to trade with this indicator. So, for this particular strategy, we will only be making use of order blocks and market structure. So we go to the settings and disable other features. Now, here's the criteria for a valid setup. Fresh order block. First, we need to identify an unmitigated order block. That is an order block that has not been retested by price after the formation. Break of structure. The order block must lead to the break of a significant high or low after forming. Next is candlestick confirmation. When price retraces back into the zone, we don't just enter blindly. Instead, we wait for a momentum candle, which has to close back outside the zone to confirm our entry. Let me show you some real chart examples. Now, it is important to first understand the trend of the market before making any decision, so that you will be sure that you are trading according to the trend. So in this chart, we can clearly see that the market is on a bullish trend. So we move on to our first criteria, which is identifying a fresh zone. Here we can see this order block printed by this indicator. Next, we can see that price broke structure after forming the order block, keeping our second criteria in check. Now, as price retraces back to the order block, we look out for our third criteria, which is candlestick formation. Now, the reason why we wait for candlestick confirmation before entering is that most times, price tends to grab liquidity below the zone before reversing or even move to the next order block. So when you see the momentum candlestick formation, it is a strong confirmation that the market has shifted momentum and ready to reverse. So in this setup, we want to see a bullish momentum candle that will close above the zone before we can enter. And when it forms, we just enter at the candle close and set our stop loss slightly below the zone. Then the target should be set at 2 times the stop loss. And letting the trade run, you can see that it was profitable. Now, let's look at a bearish example. So here we can clearly see that we are on a bearish trend. And up here we can see this fresh order block printed by this indicator. Next, we can also see that price broke structure right after forming the order block. So before this setup is considered valid, we want to see price retrace back to the zone and give us a bearish candlestick formation that will confirm price reversal from the zone. And when that happens,